Hello everyone and welcome to my morning report analysis videos on Friday the 2nd of December with me, Richard Perry, market analyst at Handtech Markets. It is Non-farm Payrolls day. Markets are relatively sort of under pressure actually, and it's not really looking at payrolls I think at the moment. They're more sort of focused on this Italian referendum that we've got on Sunday. Looks like Renzi is still in line to probably lose this referendum. And that could have significant implications for his premiership, his prime ministerial position, and also the government going forward, and possibility of sort of the elections now being called next year. So it could be that the Italian referendum gives you a little bit of downside move on these markets, and certainly that's what we're seeing today on the equity markets in Europe. The DAX and the CAC both well over 1% lower. FTSE slightly less lower, but it is interesting that we're seeing that. Also, we're seeing that the dollar is beginning to lose a bit of steam in its rally, and this has come interestingly. Let me just show you the dollar first, whereby you've seen the move just rolling over it, and if I zoom in here, that sort of could produce a bit of a top pattern. 100.65 is the low, and if it moves below that, that would complete a little head and shoulders top pattern, and you'd sort of measure that lower, and that gives you around about 99.40, I believe it is. So it could well be that we see a retracement in this dollar move. Now this is interesting because it's coming as the treasury yields are still very strong. 10-year pushed up again yesterday, and also the 2-year. So the dollar is beginning to decouple slightly from those treasury yields, which is maybe something to keep an eye on. But generally speaking, the main focus of today's economic announcements is going to be payrolls, because that is the data at 1:30 and generally tends to create a lot of volatility. Now 175 is the headline expectation, up from 161. You got 4.9 on the unemployment rate, 0.2 on the average hourly earnings monthly, and participation rate are the key factors we're looking out for. So let me just show you those on the chart. Now, first of all, talk about ADP Employment, because that came in much higher than expected on Wednesday. Is ADP a sign for non-farm payrolls? Well, not always, but it has a bit of an indication, because obviously it is an employment indicator. It has a bit of an indication for payrolls, but the expectation of 175 could therefore have a little bit of upside surprise. Now 4.9 is basically where we're seeing the unemployment rate for 4 out of the last 5 months, and that would be 5 out of the last 6 if it came in today. So basically unemployment is bottoming. Also within that, you've got the participation rate. Participation rate you'd want to see pulling higher. In an ideal world, the participation rate would be going up whilst unemployment either stays flat or goes down. Now, if the participation rate goes up and unemployment goes up, that is because more people are entering into the labour force, but those people entering the labour force are struggling to get work. So that's not always the best signal, but obviously participation rate going up is positive. Average hourly earnings you'd want to see above 0.2%, because that would be sort of year on year in line with last month, which was 2.7% growth for the year on year. So you'd want it above 0.2. But all in all, it looks like it's going to be certainly according to the consensus, a fairly solid payrolls report to end the year and be the last one before the Fed meeting. But I take this as risk on. If we get a strong payrolls report, certainly risk on, because you're not going to see a change in the Fed expectations, I think, on the payrolls report, and subsequently I think that risk on would come through a strong payrolls report. So that would mean euro going up. You'd see some dollar strength, yes, but you could also see ultimately a little bit of a retracement, possibly on the fact that euro would start to find a bit of support, also sterling maybe, and the higher risk currencies such as the Aussie and the Kiwi. So that would be an interesting one. Also, the main one would be yen weakness and also gold weakness, so watch out for that. But that takes me to my chart of the day, which is the DAX. Now the DAX has broken down. You can see this through this near-term break below 10 1.1575, which had been a floor in the last few weeks. That broke down decisively yesterday on a close below and continued today. Really strong downside move. Look at these momentum indicators, really strong on the MACD lines crossing lower, the RSI falling back below 40, the stochastics also sharply in reverse. So this is in correction mode, definitely, on this chart. Now 101.75 is the range low, and we could see the market sort of dropping lower in that regard. Now here we see on the hourly chart, I've zoomed out a fair bit because I think it just shows you more of a way that we've actually dropped below this pivot line at 10.450 as you can see. So get rid of that. 10.450 is a pivot line on this chart, and you drop below that today, and that is also now going to become a basis of resistance possibly. So between 10.450 and 10.5, 10.5 being basically yesterday's low, I think there's a resistance. So that could be your little band of resistance. On the daily chart or the cash index, you've got a gap also that's open. That arguably needs to be filled also. So between 10.450 10.5, I'd say that would be your selling opportunity. 10.575 is your key resistance now. But look at these momentum indicators, all negatively configured. The RSI failing at 60, going below 30, that's bearish. Obviously below 30 means it's a touch stretch, so you might see a bit of an unwinding move. So as I said, you've still got that gap open, and you might well see that filled. So that would be it. But I think that generally speaking, you're now looking far more corrective on the DAX, and you could well see a drop towards the range lows once more. So I wish you good luck in your training today, and I'll speak to you later. Thank you.